Anurag, hi, welcome. Let's start with precious metal first. And while we did see good gains coming in, nearly 1300, if not that level, but we are back to around 1280 right now.
Yeah, looking at the run-up, probably two things which can be taken from this kind of move is one, there is no change in SPDR holdings on the physical and on the ETF side. So probably this run-up we have seen is more or less on the futures market. And the second point is now we can be more comfortable correlating gold movement with the FOMC minute details because we are not able to find out the data points on which gold might react. Having said that, there is still too early to close into the bulls. Probably we are still looking at a level of around $1,230 to $1,220 coming in for next week. We will continue to hold shorts around 26,600, 700 on the MCX front with the stops of about 26,900. The target can be taken for MCX prices is around 26,300 for 2 to 3 trading sessions.
Anurag, how would you look at the energy space? Because this is the second straight week of very strong gains coming in for this space. Today, of course, has been a day of steady moves. But how would you look at the Indian prices after hitting that all-time high of 6440? Where do you see prices headed?
Prices, as of now, we are still trying to contemplate energy prices with INR move because more or less, whenever we have seen flat movement coming into the international market, rupee has played a different role altogether. So we would be cautious and we would be long on crude. We are again hoping for a level of around 6350, 6370 kind of a range. On international front, till the time $105 is sustained or $104 is sustained, it will be interesting to see how the next week opens.
The base metal space, and while it has seen some traction coming in because of the strong Chinese import numbers, but the Chinese inflation numbers were on the higher side. So it really is contradicting fundamentals coming in from that consumer. How are you playing it up in the prices?
As far as the prices are concerned, again, we are taking a cautious view. You can call it as a momentum trade. We would be long on copper at around 418 to 419 kind of a range on MCX for a target of 424. Although it's a cautious call, one will have to really wait for another week or so to take a clear understanding on base metals as a whole.
Well, that's about the non-agro space, Anurag. Let's talk about the agro commodities as well. And the sugar prices have seen some news coming in yet again. The notification about the 15% import duty has come in, but not many people are really celebrating that.
Yeah, absolutely. We have discussed this last week also. The anticipation was there that import duty will be changed, and then now it's officially been communicated. But still the prices have not reacted to that. We are looking at a level of around 2900 to 2850 for this season. We are pretty comfortable with the carryover stocks and the way monsoon is playing in India. There might be a good crop conditions which will be coming into the play. One will have to wait and see what kind of MSPs which are declared later this month, which will play a better role on the sugar front.
Another space that has been buzzing but in pockets really has been the edible oil space. On one side, the high crude prices have taken the palm oil prices on the higher side. The imports also have done a bit of a trip because of the rupee depreciation. But even then, there's not too much of a euphoria coming in for the soybean prices even at these levels.
As far as analyzing agri-commodities, I think we are much more at a sweeter spot because of the monsoon conditions and the overall global crop conditions which have been projected in USDA reports, especially for the edible oil complex. So all these plays or all this noise will be there in the market, but fundamentally we are bearish on the oil, edible oil space counters. We will be short on soybean and we will be short on CPO as well. As of now, we have given a call on soybean for a target of 3150 to 3100 kind of a range.
Anurag, would you say that perhaps this is very near term till the monsoons last and there is this expectation or sentiment of good crop coming in is when you will see the prices under pressure? Come August and September, when you see the wedding season, the festive season rather kicking in, would the demand go up, and would you say that perhaps medium term to long term we still are staring at high inflation in sense of food?
Yeah, high inflationary pressure will be there because the major component being the crude, that will take away the production estimations. But as far as realistically concerned, we still feel that there will be a good monsoon and there will be a good carryover stock. As far as crop expectations are concerned, we are still looking at a bearish trend on the edible oil space. Across agri commodities, we still have to find the pick as far as North trade is concerned. But overall, we are bearish on agri commodities.
Yesterday was a very good day for the gold prices. You saw saw them trading at around 2-week highs at around $12.95 plus kind of levels as well. But today you have seen most of the commodities decline. The prices had run up after Bernanke's speech. There is going to be more accommodative policy going in, but the prices had run up too much too soon, and you are looking at some profit taking coming back into the markets today. So with the gold prices down nearly a percentage point, you have seen that kind of a mirroring effect coming in from the Indian markets as well. The silver prices also are down nearly 1% from the kind of highs that we saw in the markets yesterday. Same is the case with the energy space. You saw 15-month highs yesterday, but we are looking at some profit taking into that space as well. And that's how the base metal prices also are trading down with profit taking. So that's how you are looking at across sectors there. The market really is looking at another view here as well. While you have seen accommodative policy coming in from US, Japan and China, the other view is that the recovery perhaps is not so strong as the markets were thinking, and that's the reason you have the easy money policy coming in, and that seems to be pressurizing the commodities as of now. How do you trade them today though? For that, let's get in Amar Singh Dio with his strategies.
From an intraday trading perspective in the domestic markets, gold can be a sell below 26,550 with a stop loss above 26,650, targeting 26,390, 26,400 levels from an intraday trading perspective. Crude oil could be bought above 6325 with a stop loss of 6250, targeting 64, 6430, 6440 on the upside. Copper could be bought above 422.5 levels with a stop loss at 418 levels, targeting 427-28 levels.
Let's get in Hitesh Jain from IIFL, and he joins us live on the show. Hitesh, hi, welcome. Let's start with gold first. And while we have seen steady moves coming in for much of this week, what's your sense coming in on these current prices?
Manisha, the pendulum seems to be swinging back towards the possibility of Fed actually remaining accommodative for the foreseeable future. And the post policy minutes, markets have perceived the fact that in fact Bernanke has clearly stated that the interest rates would remain low for a foreseeable future. And in fact most of the Fed members have also opposed an immediate end to the bond buying program. So all these factors are actually giving a lot of support to the precious metal pack. We believe that the upside could be extended up till $1320, $1330 on the COMEX. But we don't see a major upside because the investment demand still remains fragile, and we're seeing consistent outflow on the ETF front. So a moderate upside cannot be ruled out, and in that perspective we would prefer to buy in the short term perspective categorically for next 3 or 4 days. For today would prefer to buy gold on the MCX around 26,500, a bit on the dips, keeping a target of 26,850 and a stop loss of 26,300.
Hitesh, what's your sense coming in for the base metal prices as well? The easy money policy is coming in not just from US but from Japan and China as well. That may just continue. Do you think this sector also might see some gains because of that?
Yeah, see, copper prices have been flirting with $7,000 on the LME, but they have not been able to breach on a closing basis, and you always see prices scaling back from those levels. The next week would be very crucial period for base metals, because we have a lot of slew of numbers coming from China, including GDP, industrial production, and a lot of people expecting Chinese central bank to come with some monetary stimulus in event of poor data. So see, a lot of things are dependent on those factors, but on technical perspective, we believe that $7,000 seems to be a crucial resistance, and prices time again and again have failed to surpass those levels. So on that basis, we would prefer to in fact short copper around 423 or 424 levels, keeping a target of looking at a target of 417 and keeping a stop loss above 427.